So, illustration 2, Dr. Artho starts his medical practice on 1st January 2013 and introduced a capital of rupees 3 lakhs receipts and payment account as on 31st December 2013. So, receipts and payments. So, the receipts and payment account has the closing balance of cash in hand and cash in bank. So outstanding salary, medical equipment purchased, depreciation. So prepare income and expenditure account and balance sheet. So we have to prepare income and expenditure account of Dr. Ardos for the year ended 31st December 2013. The given information. So as well as the balance sheet. So payments, clinical rent, salary to staff. So we'll go with the receipts first. Consultation charges, capital introduced. So consultation charges, these are the revenue receipts. So we have to show it in the income side of the income and expenditure statements. So incomes will record in the credit side of the account. By consultation charges 25 lakhs. So no other receipts are there. Outstanding salary, salary is the payment, equipment purchased. Okay. So clinical rent. Clinic rent, clinic rent 2,40,000, and salary to staff 3 lakhs, but we have outstanding amount 50,000. Add outstanding because we are preparing income and expenditure statements, so we can record outstanding expenses. So we have to record on accrual basis. So 3 lakh 50,000. So books and periodicals 15,000, and medical equipment, other expenses. Other expenses are 38,000. 38,000. Medical equipment 4,50,000 purchased on 1st April 2013. 1st April 2013. So we have to calculate the 15% depreciation on the equipment. To depreciation. So equipment cost is 4,50,000 into 15% into, so it is purchased on 1st April. In the sense, so medical practice from the 1st January. So he used it for only 8 months. Sorry, 9 months. So it comes around mm, it comes around 50,625. So okay, we do not have any other transactions to record in the income and expenditure statement. So we'll finalize these things. 25 lakhs. So we have the surplus. So that is excess of income over expenditure. That is 18 lakh 6,375. So this we have to prepare the balance sheet. So first of all, we will consider the details from the problem. Capital introduced. That is 3 lakhs. So cash balance, cash balances 57,000 and 17 lakhs. Cash balances. So another thing is medical equipment. Medical equipment, that is 4 lakhs 50,000. We have to deduct the depreciation. $50,665 is the depreciation. Income and expenditure account is nothing but the profit and loss account. So we have to record all the transaction on approval basis. But the name is different because we have to um, calculate the surplus, not the profit. So mission equipment cost is 3 lakh 99,375 is the closing balance of the machinery. So capital introduced is 3 lakhs, and we have to add the surplus. We have to add the surplus, which is 18 lakhs 600, 18 lakhs 6,375, comes around 21 lakh 6,375. So we have outstanding salary 50,000. So there is no transaction left over. So we'll finalize the balances. That is 21 lakh 56,375 in the liability side, and asset side as well. So we'll move on to the another illustration. Dr. Sharma commenced the practice in January 2018. He prepared the following receipts and payment account for the year 2018. So receipts and payments account. So 6,000 were still outstanding on account of visits. Assistant's salary will still payable is the 900. So stock of drugs, I'll make a list of it so that it will be easier for us while calculating things. Okay, so there are five adjustments, and you are required to prepare receipts and expenditure account. Receipts and expenditure account and the balance sheet relating to the 2018. So, uh, if we just remember the details of receipts and expenditure account, so we have to record all the receipts on cash basis, and we have to record all the expenses on accrual basis, and that too relating to the current year. So, solution, receipts and expenditure account. Receipts and expenditure account and balance sheet. Okay, and one more point we have to remember is outstanding fee or receipts. Outstanding fee received or outstanding receipts be ignored. So this is the most important point we have to remember always while preparing the receipts and expenditure account. So what are the receipts? Cash introduced. So, and one more thing, this is nothing but a profit and loss account. But the thing is, whatever the incomes or receipts, we have to record in cash basis, right? So cash is asset, but the thing is, cash introduced in the sense we have to consider this cash introduced as a capital at the time of beginning of the practice. Whatever they introduce, we have to consider it as a capital. So cash introduced 45,000, and receipts from the other dispensing. So this is the receipt 43,500. So by receipts from dispensing 43,500. Next, by visits 60,000. By visits 60,000, and by miscellaneous receipts 1,500. 1,500. So these are the receipts during the year. So payments, payments and adjustments we have. So adjustment relating to the visits. See, first of all, record all the transaction, whatever related to the receipts and payments account. Okay. So visits, I'm not recording the amount as we have adjustment and okay, equipment, furniture. So these are the assets, drugs. So we have stock of drugs on hand was estimated 3000 at the end. In the sense it is a closing stock. So opening stock plus purchases 50,000 minus closing stock. Then we'll come up with the drugs consumed. So which is an expenditure. So drugs consumed. Opening balance we don't have. Purchases 15,000 we have. 15,000 minus closing stock 3,000. 3,000. So we have used 12,000 rupees of drugs during the year. Another one is assistant's salary. So to assistant's salary we have an adjustment. So that is payable 900. This one is 9,000, 9,000. Add assistant salary 900. Okay, we'll do adjustment all at a time. So rent 7,500 to rent 7,500. Conveyance 4,500. Conveyance, but we have an adjustment 50% of conveyance is for domestic purpose. In the sense we have to evaluate the professional purpose of conveyance only. In the sense 50% we charge it to the receipts and expenditure account as an expenditure, and 50% it is like a personal use. Nothing but we have to deduct it from the um, capital, like a drawings. Conveyance 50%. So it is a 4,500. In the sense 2,000 um, 250. Okay. Another one is stationery 900. So furniture, equipment, stock. Lighting, journals, lighting 1,050. Journals 1,350. So drawings, it is related to the balance sheet. Okay. So these are the things we have to record it in the expenditure and receipts account. Okay, now we'll go one by one of these adjustments. First one, 6,000 were still outstanding on account of visits. So visits, on account of visits, we have outstanding receipt. So as we are preparing the receipts and expenditure account, we have to ignore completely these outstanding receipts, so that we are not going to consider this. In the sense, we have to take 60,000 is the final amount. So another one is assistant salary payable 900. So we have to add the assistant salary payable so that the amount is 9,900. Another one, stock of drugs. Oh, so I already made it. So stock of drugs, we have to evaluate the stock consumed, drugs consumed during the year. So purchases minus closing stock, that is 12,000. Another one is furniture and equipment are subject to depreciation 10%. So furniture 10% and equipment 10%. We have to record the depreciations. Depreciation, furniture, equipment. So furniture 7,500, 10%, that is 750. So equipment 30,000 into 10%, that is 3,000. So furniture and equipment depreciation done. So 50% of conveyance is for domestic. In the sense, remaining 50% is belongs to the profession. So 50% conveyance comes around 2,250. So we have recorded all the transactions. So we'll finalize the balances. 1,05,000. 1,05,000. 1,05,000. We have to. So it comes around 66,300. So as I told you, the cash introduced, we have to consider it as a capital. So 45,000 capital introduced, 45,000. So we consider all these three transactions in the receipt side of the receipts and expenditure account. So equipment, furniture, these are the assets. So after deducting the depreciation, we have to mention the final balance. Equipment, furniture 1,500 minus 750, and the equipment 30,000 minus 3,000. So 27,000 is the final balance of equipment, and 6,750 is the final balance of furniture. So drugs, we have closing balance. Okay, we'll come up with the adjustments later. Assistant salary, rent, conveyance, stationery, lighting, journals, drawings. So we have to search for direct transactions first. So drawings 42,000. Add net profit or surplus less drawings 42,000. 42,000. So there is no transaction left in the receipts and payments account. So we have to go with the adjustments. So first one is outstanding visits 6,000 rupees. As I told you, we should not consider this outstanding receipts because we are recording the receipts on cash basis and expenditure on accrual basis. So we have to ignore this one. So another one is assistant salary payable. So salary payable, salary payable 900. It's a current liability. So stock of drugs, closing stock 3,000. Closing stock 3,000. So furniture. So we already considered the depreciation amounts. So 50% conveyance for domestic purpose. So we have to deduct this 50% conveyance from the mm, conveyance 50%. 2,250. 44 250. We have to deduct it from the capital. Okay. Before deducting, we have to add the surplus amount to the capital. Comes around 1,11,300, and we have to deduct the 44 250 out of that 1,11,000. So it comes around 67,050. Okay, conveyance. Okay, so mm, closing stock we received it, but we ignored this closing balance of cash. So cash 31 200. So let us finalize the amounts. 67,950, and this one also 67,950. Now we have to ignore the outstanding receipt. Whatever capital introduced, we have to consider it, and closing balance of cash we have to mention in the balance sheet. So this is how we have to prepare the receipts and expenditure account.